Welcome, everybody. How we doing? Welcome, everybody. How we doing? Hope everybody had a good day. No, Bird is headed south. Bird is headed south. We don't need to chart that. We know. Classic. You chase the green candle on bird calls, huh? That'll get you every time. I wasn't saying nothing. I was laughing at something else. What's happening, Al Brooks? How we doing? And tech still just fighting, huh? It's crazy to see a lot of these big tech names have put in some nice moves and QQQ still not at them highs. Nice little double top setup into some data. That's always fun. That'd be cool if we could pop that tomorrow. Big though before, huh? Welcome, everybody. We'll give it a few more minutes, see if a couple more people want to show up, and then we'll get to rolling. Hope everybody had a good day. It's pretty fun. A little volatility here and there. Lambos, how we doing? There it is. Drop it. Bless it, everybody. You think Kiki is breaking out tomorrow, Lambos? Tried to peek it today, but no. Dude, what about Micron, dude? Let Micron get some love, dude. Everybody trying to talk about Nvidia. Look at that daily candle on this thing. Oh yeah, AMD just about ready to be purchased, in my opinion. They're about to they're about to I just listened to like a few of the things they said, and they're actually putting out some things. I'm not gonna say that it's gonna compete with Nvidia, but they're about to be the only people besides Nvidia making these some things. So I think that they're kind of suffering a little bit from what Micron was suffering. They're sold out on a lot of stuff, and a lot of stuff isn't going to be delivered until that I think they said third quarter 2025 for some of it, second quarter 2025 for some of it. And so I think the market didn't like them saying like, okay, look at all this cool new stuff that you can't buy yet, but we get back down to this trend, this 158, this 160 area, I think could be a really nice place to get in there. But we did feel, there's this little, it's hard to call it a gap because of what this candle did, but we had this little gap here that I was talking with a buddy of mine, and that might have been kind of the spot to give it a try, at least, that if you were looking for that early entry. But see how that would have worked out. Ooh, yeah, it would have been tricky, but it was it could have been the spot to try. We'll see. But I think that thing will get a nice pop, the fact that Micron kept on running through it. Nvidia, obviously nice strong day out of it as well. Nice push up, early in the day, then nothing really for the rest of the day. But reclaiming all those big levels it needs to, I mean, it's doing good. We're actually, for the first time in many months, seeing some money get back into that chip trade. So it's been a little bit fun trading it. Okay, give me 1 second. But yeah, I definitely think AMD coming to that by the dip zone. Nvidia already on that breakout, I mean, it gave the nice breakout. It even gave you a chance that next day. Like you don't get them that perfect that often, And that was well, apparently the entry for Nvidia, considering it's $6 higher or whatever. Okay, welcome everybody. Happy to have you here, Dirty River. Tonight, nice cornbread. How we doing? Hope everybody had a good day. Tonight we are doing, we've done a lot of lectures in here, building trade plans, things like that, and something that I always talk about is that, you know, a good trade is not a good trade without the right context. And I get asked what I mean by that a lot. And that's what we're going to kind of cover a little bit tonight. These aren't trade plans. These are trading strategies. Like everybody else, I build trade plans. I mean, like, for example, we were just talking about one on AMD, maybe this little micro gap, if you want to call it that, was the entry, but I would feel very, very comfortable on the dip by down here, 158, 160, and then looking to stay long for a slightly, maybe little bit longer term trade. Oh God, the 200 was right there too. That might have been the entry, but staying long for a little bit longer of a term trade, seeing, as we know, first breakouts almost always fail. So here was our first attempted breakout, obviously failed, tried again, and now we're taking that nice pullback again. So I love building a trade plan, and we can say, hey, I want to buy the dip at, 158, 160. And it's great to have that plan. However, it's when we're in the market and when we're trading and we actually have to execute the trade, that is what a strategy is. And these can be applied to short time frame, long time frame stuff. Tonight we're just going to talk about, you know, a couple common ones that people use, a couple that I like to use, and then kind of just talk about how to use it. We're going to start with, applying actual trading strategies to support and resistance trading. Because everybody who day trades uses support and resistance, and the idea is you buy at support and you sell at resistance, or you short at resistance and you sell at report or at support. Flips calls it trading level to level, call it whatever you want. That's what trading is. That's your entry, that's your exit. That's what support and resistance is. However, you can't just buy every pullback to support looking for a bounce. If there's not good context, then there's no reason to take the trade. And so I'm just going to use myself as an example. I get asked all the time on trade floor, what do you think of this trade? Puts here, calls here, whatever it may be. And I will always send a chart, and then I will explain that, hey, the trade is probably not for me. And that is because the context isn't right for me. Today was one that my buddy, he could be in here, Ryan, asked me, what do you think of Amazon puts right off the open? Or, on this push up. And I said to him, hey, the trade's not for me, because like he was asking up here on the top of this green candle. The trade's not for me. There is a double top. Yes. There's no denying that we have some double top action going on, but we have one of the only tech names that gapped up and held the gap up. It didn't sell on the CPI news. So we got a nice strong open on it. We've had a reversal down that was instantly bought up, broken above a level, and strong buying above it. So I have a few things telling me a bounce is coming. Nothing awesome, no really good trades. We're still just kind of within this range here. So, that pre-market range. So I don't have a ton of interest trading it. And then up here, we have a double top. So yeah, it's definitely a double top. I'm not denying that at all. But the context isn't very good. The market is saying, hey, Amazon is strong today. Did it ultimately end up selling, and was I wrong? Yes. And, I'll admit that every single time. But for me, the context was not there to actually take that trade. And so, did I end up being wrong? Yes. But it's still not a trade that I would personally take. I also still personally wouldn't even have taken this breakdown with the little push-up retest on it. It just wasn't for me due to the context of the market of Amazon was one of the few tech names that was like, well, Micron, there was a couple that were looking good, but Amazon had the dip buyers showing up instantly. So it wasn't one that I was going to jump in front of. And then it was one that I was still looking for the dip buy. And so because of that, oops, because of that, I I I stayed looking for the dip buy. And so this is where we're going to start with the lecture. We're going to start talking about trading around support and resistance and how we can use the overall market to help us figure things out of, do we want to be entering these trades? Do we want to, do we want to put the risk on? What are some things that we can look for? And so when I trade support and resistance, which I do every single day, obviously that's how I trade. That's how most people trade. When I trade support and resistance, as most of you know, I only have daily levels. So, or I don't, only have daily levels, but they're the levels that I care about. And ones where I actually have interest in putting on a trade is when I'm close to those daily levels. But I always want the context of the market in my favor. So today, when we had Amazon taking the nice push up, like bought the whole time, even bought on core was slightly hot. Normal CPI was cooler, but not as cool as predicted, but still cooler. And so kept buying. So to me, dip buy mode on Amazon. And so I started looking, as you guys know, I only have my daily levels. So I use things like EMAs or VWAP or the hourly 20 or the opening range to give me what I need in between these levels as far as targets. And so Amazon today, I actually took a couple scalps early, but the trade that I was really interested in on it was as we started trading down here. And so as I said, I had a long bias on it, even though we're selling. So yes, we are below the EMAs. And so this is how, these are things that I look for before entering any trade and to figure out if I'm being crazy or not. So around here, where we've set a lower high and I can now, or a lower low, and I can now draw a trend between those, and we're coming into the opening range being set. So I start to look at context of the market, and I'm all the way over here, assuming that we're going to get a little 3-push wedge down here to the opening range. And I know, so now I'm starting to say, okay, I'm looking for a bounce down here. We get a bounce. We get a bounce. So we've had a couple bounces on this trend. I am now buying, and this is where I ended up buying, was this candle right here. I think I might have waited a little for this pullback, but it doesn't matter. Somewhere right in here, I saw us hold. I saw us hold. I saw us hold with a bit of a reversal candle. So this is where I take my buy. And I start to look at the rest of the market. And what do I look for in the rest of the market is, what are the other big tech names doing? So that's what I have right here. A lot of people ask me, what do I look at all day, every day? And this is normally not small like this, takes up a whole screen. I look at Apple, Amazon, Microsoft, Nvidia. They all have the same indicators. They all have daily levels on them. You can see there's not a ton of levels on them. Apple should have some levels on it, but there's not a lot going on. But I start to look, and so I'm looking, and Amazon's one I always watch, so it's already right here. So I'm looking to get long Amazon. Well, then I want to see what is the rest of the market doing at that time. Well, I got Apple holding all EMAs and VWAP, not doing much, but staying on the bullish side of the market. I have Nvidia has obviously bounced and ripped, is now holding above a level, above all EMAs, above VWAP, above hourly 20. Microsoft looking a little bit ugly, can make an argument for a double bottom, but kind of a similar looking, slow, not super dramatic sell-off, just like Amazon is experiencing. And then if we really zoom in on Microsoft, we're seeing buyers on all of these candles. So are we coming down? Yes, but most of these candles have big wicks on the bottom. So I now have the context of the market. Okay, Nvidia's strong. Apple's holding where it needs to hold. Amazon is now coming into hourly 20, coming into opening range, coming into my trend, holding above hourly 20. I have a very tight stop right here. And then Microsoft, again, the weaker looking one, even still ended red on the day. So did Apple, but still ended red on the day. But coming into a place where I would at least expect a bounce. So final thing I look at is QQQ. And obviously QQQ around that time had been bought up above VWAPs, above EMAs, battling the hourly 20. But as long as QQQ is holding that VWAP, we should be looking for dips to buy. So this is everything I look at before I take any trade, whether it's on SPY or QQQ or any individual name. If I am taking a specifically support and resistance trade, I want to make sure all of these things are, and maybe I don't have 414 on here, but I'm setting a double bottom. So maybe it's not a level I care about, but I can visually look at this and say, okay, this is where it needs to hold. Okay, Apple is holding. Do I have a level at 228? No, but I have a ton of EMAs in VWAP. QQQ, same thing. Do I have a level right there? Maybe. Well, I have a level at 490. So above my daily level, holding above VWAP, holding above all EMAs, and then Nvidia down here, obviously buying, obviously showing strength. I can now say, okay, tech is in dip buy mode, no matter what tech you're looking at. So Amazon is the one that after I look at all of those things, here's my confirmation. We hold it. We hold it. Everything else we just looked at that same time frame, all holding. I buy the close into the opening range. Once we've closed back inside of the opening range on a relatively strong green candle, that's where I want to be in the trade. So that is my strategy for trading support and resistance. Anybody can do it. It's very easy. You just want to analyze the whole market. You don't just want to look at Amazon and say, and there was probably a lot of people, oh, short Amazon, it's below the 9 EMA, 9 EMA crossing below all these things. Well, when we look at the whole tech market and realize it's looking like dip buy mode, we're coming to a point on Amazon, very strong thing, at least for me. I trade the opening range, so I put a lot of weight on it, coming to a very, very strong level, setting a 3 push wedge, not hard selling, pretty average selling. I can't go back and tell you what the volume was at this time, but we not super high volume, just kind of middle of the road volume, some buying, some selling, some buying, no one side really just beating the other. So all of a sudden we can start to look to take a trade. And we're looking for this trade up here. When we're taking this first bounce into these EMAs, which we're going to get into next, and we're taking this first bounce in these EMAs, we're still looking for, okay, opening range is coming soon. What are all the other names doing? So we get to watch the market. Some people love that, some people hate that, but we get to watch the market develop for 20 or 25 minutes and not take the early entry. We're not entering up here. We're not entering at any of these, opening range is coming. So we sit and we patiently wait. Something that I always try to teach people is 90% of being a good trader is doing nothing and waiting for your opportune entry. So I took the entry here. Very obviously my stop is here, and if this is just a scalp, if that's all we're looking for, or day trade or whatever it is, you want to run that tight stop. If you can run the really tight one right outside of the opening range, but you got this trend down here, you got these previous lows down here, you basically have to extend it down to there. So you're really only risking, whatever it is, 20 cents a downside. And then of course, if we're, I want to close down there. I don't want to wick down there like this. I want to close and then I'll stop out. No big deal. And then you can see this trade. I'm sure this wick probably worried me a little bit, but it was already paying. And you target EMAs. So we know all of this before we enter. We start watching the trade up here. We pull up all of our other charts, we're like, yep, and we got to watch this. Apple's holding, Apple's holding, Apple's holding, we got to watch Microsoft. Okay, it's coming down. Is this right here going to end up being, some sort of double bottom? And we can watch for that starting up here, seeing these wicks bounce it and say, okay, we're looking for a little bit of a bounce here. Again, QQQ. Straight buyers after that one red candle up into all these EMAs, up to the hourly 20 and in buy mode above our daily level. And we got to watch all this happen, and then obviously NVIDIA buying. So we don't even have to look at that one. NVIDIA's in buy mode. We see that, and then by the time we get down here, we know our entry. We know what we're paying for these 187.50 calls on Amazon. We know where our stop out is. We got 20 cents a risk or whatever it is. First target could be your 9 EMA, 20 cents overhead, but I'd make it kind of these EMAs up here, 40 cents. So you already got one risk, two reward just on the scalp. And then, strategy doesn't matter. Strategy is about entering and planning the trade with repeatable results. You can do this with, support and resistance, whether your support is the hourly 20 or it's the opening range or it's a big daily level. You can do this all day, every day with it. I wanted to talk about this trade because this is one I took. So I could tell you literally every single thing that I looked at and what my thought process was before getting in there. My thought process is not just, okay, it's reclaimed the opening range, I'm getting in calls. Maybe that's good, maybe that's bad. But if the context of the market tells you it's bad, then you don't want to take the trade. So we will touch on one more trade for now on Amazon. This is a trade that I didn't take, but I mentioned earlier. And why didn't I take this trade? So it's this one right here. Is this a reasonable short that, my buddy wanted to short it up here? I said, I'm not, but you can. And I was wrong for sure. Is right here a reasonable short because we came back and, we broke a daily level. So a break and retest of a daily level is a very good strategy. It works a lot. And so now we have to again go to context in the market. And This one is a trade that I still wouldn't take, but I thought it would be really good to show an example of why wouldn't I take this? So maybe we've seen this buy up, maybe you're short bias, I don't know, and so you're looking to enter the break and retest here. Well, if we go again to the rest of the market, QQQ is sold and then it's already being bought up. Then if we look at Apple, it's been bought up. It has taken a rejection down. Didn't quite make it to highs, so it has taken a rejection down, but it is still trading above its open even after these pullbacks and going sideways. So we don't love it. Microsoft also bouncing and Nvidia also bouncing. So when I look at these four things at that time of day, and then I go to Amazon, I don't want, and it's the one that was nice and strong coming into the open. So we already, in my opinion, should be looking long. When I look at the rest of the market, I don't personally believe that Amazon is going to sell like this because nothing else is. So why is Amazon, that was the strong one, going to be the standout against it? You can, of course, be wrong. And there can, of course, always be, one weak name, one strong name. That's really what we had on tech today. We had names finishing red, even though they were bought all day. They just took a gap down. And so we had a mixed bag today. And so for me, there is not enough confirmation there for me to want to take that trade. And I was dead wrong, don't get me wrong, but I will always use the rest of the market to tell me those things. I mean, even if we really start looking at this, we got, we're above EMAs, we're above VWAP. We end up, of course, not being above them, but at the time, we're above them. So it's not a trade that I personally look for. So those are my example. That's my support and resistance. That is what I do anytime I am taking a trade based on support and resistance. As far as my entries, sometimes they're going to be the first close out. Maybe I'm going to look for a little bit of a pullback, but my entries are always going to be something like this. And then it's always going to be a stop is very, very tight because that's the safest way to do it. SPY is another one that this was another trade, support and resistance. This was another trade that I took and I bought this candle, but on the way up. And, I would have taken the close of this candle. I had very strong zone right here. And then again, I got to go back to the market. I got to look at these big names. And of course, this one normally for me is Amazon. I got to look at these big names and I see, Wix on Apple. I see buying on Amazon. I see a big buy up on Microsoft after the sell. And then obviously Nvidia buying, but it was 50-50 for me. But what I did here was I looked at the volume, and on this dip down, we suddenly have higher volume or equal volume to the first couple candles of the day in a hurry. This thing was just climbing. So I got in there a little bit late. You could say I chased it, but I knew where my stop was. So the next trade that I took very few trades on SPY today. I took a few scalps, but the next major trade that I caught, and I actually ended up taking kind of a trade off of it twice, was this trade right here. And I caught this wick down. Honestly, I bought it here with a limit order. I had the order ready because this one, it got close. I thought if we touched it again, we'd at least take a little bounce. So I bought it here, got super ugly instantly because we're late in the day, and you have an instant 20-cent move against you, it gets pretty ugly on those things, but was able to catch this move up. So that was a mid candle buy. Well, this is the same thing. We always have to look at context in the market. And so with SPY, I look at even more things than if I'm trading SPY, I am never going to say, oh, double bottom on SPY at the opening range. Do I like that trade? Yeah, I love that trade, but I need other things to tell me that. And so that's again what I do. I go and I look at other things in the market. And so this one, I obviously look at all of these names, look at all the names. What are they doing? still looking strong, still holding well above our lows, holding even above our entry on Amazon. Obviously, Apple looking good above VWAP, holding hourly 20. So everything's looking good there. Microsoft selling down to these previous highs, looking like a bit of a bounce point. Nvidia obviously strong, giving us the first touch of VWAP all day. So obviously we're looking pretty good there. And then I had two other things that I was watching. And these come from my last class. For anybody who was here or for anybody who's at that one, Tick is one that I always watch when I'm watching Spy, and ADD, the other one I always watch when I'm watching Spy. So we know that when Tick is giving us these, 8, 9, 1,000 range, we are getting too oversold. So this is the first wick on Spy. That's this wick right here. We went oversold. I want to see this next wick get us oversold. And that is what this candle did. So that was why I felt confident. I got to watch all of these names. They're all coming just into support. These supports happen to be VWAP and hourly 20. Everything's looking good. Microsoft coming into these previous highs where the breakout came from. Obviously, if you'd like trade flags, but a little trend break coming back to equal level of that trend break. So everything looking good right there. Then, yeah, isn't that funny, Agent J? Yeah, because I got sent the chart, of this here Head and Shoulders, so if this was a Head and Shoulders, I don't believe in those. You have to break down here. So everybody, and that's, the neckline. This is where your neckline would be. So that would have to break for it to be real. And so you gotta love the Head and Shoulders that breaks upside. It's just the perfect example of why I don't get sucked into those, But so I looked at all my 4 big names, then I looked at Tick and ADD, and they're telling me we're oversold, so I buy it. This one was obviously just a wick. And then for anybody that was on trade floor, somewhere right around here, I started jokingly saying that Sushi Joe said that he was buying some 576 calls or something. I think that's chick. Yeah, paid $14 for him. I was hinting at, hey, we have a nice little sign of a reversal coming. We set a low, we set a higher low, we're above EMAs, and we're close enough to a strike that for $14, I'll take the risk, I was, of course, out like right here or something like that, and then they went crazy. But this is why I was hinting at that. And then again, we saw all of that occurring, and then we come back to here, and we get to say, okay, we got oversold there. Okay, Apple's starting to bounce. Microsoft's starting to bounce. Amazon, obviously, little sell, starts to bounce, rip into close, And then Nvidia buying up off the lows. So all of those are telling us, look for a bounce. So this is context in the market. So this is going to be the longest one. These next ones, and so any questions, I should say, this is how I trade support and resistance. This is how I trade day in, day out, every single day. These are the things that I am looking for to confirm my bias or whatever it might be. The next ones that we're going to talk about are some more specific strategies, like the one I mentioned, a pullback to the 9 EMA. Great strategy in the right context. Double tops and double bottoms. That's what we're going to go into after it. And then we're going to talk a little bit about trading the hourly 20. We aren't going to get into too much detail because it is going to be a big part of one of my next lectures. But we're going to cover all those. So does everybody kind of see what I'm looking for when I'm trading support and resistance day in and day out? How do Tick and ADD correlate? So we can do it really quick. So what Tick tells us is in the New York Stock Exchange, which not everything, not everything in SPY is in the New York Stock Exchange. Some of it is on the NASDAQ, blah, blah, blah. In any case, Tick tells us it's tracking 2,800 stocks. So when it is green or it's moving up, that means more stocks are ticking up of those 2,800 that it watches, which means, one person just bought SPY for 500 and then the next person bought it for $500.01. That is a tick up. So when we're above zero, that means more things are being bought up, or if candles are turning green, more things are being bought as they're going up. So selling is obviously below zero and red. And then ADD is another one And so what ADD tells us is it's another, again, and I did a whole lecture on these a couple weeks ago, so that's why this is fast. Again, it has a zero line. It's advancing and declining issues. And what that means is it again tracks 2,800 stocks, and it tells us how many of them are how many of them are advancing, how many of them are declining, which is basically how many are red, how many are green from the previous close. So when we see big buying on ADD, even though we're below zero, we are seeing a bunch of buying go on in the market. And so while 1,000 stocks opened red, actually more than that, but we see 1,000 on here, that means more stocks opened red than green. But when we see all this buying, all of a sudden, half of those stocks have now flipped green on the day. So that's why when you don't ever want to use support and resistance, ignore these indicators on here. That's just because they're loaded on my chart. Don't ever use indicators on ADD, tick, VIX, any of that stuff. Don't do that. But when you see things kind of basing and then all of a sudden you start seeing buying, that's how you can end up with getting, this is a lot of buying going on in the market. Joe, yes, I will not. No. So you have to always remember the stocks move the ETFs. The ETFs don't move the stocks. So we are making an assumption when we see tech is buying, and with oil, you can watch your XOMs, your Chevrons, watch Shell, watch all of your big name oils, or you can just kind of watch XLE and know what they're all doing, and that'll be very helpful for trading things, like futures if you trade CL or any of that stuff. If you're trading futures, watching XLE can be very helpful, but they are all moving based on oil. So yes, you can watch those, but we're all watching, or I'm watching all of those names, like the tech names, for example. That's just, what I was using today, because they will generally move similar. And, you can, of course, have one standout name that's absolutely running, or, one really, really weak name when the rest of tech is weak like that. But we want to just say, as a whole, am I trading with the market? Because, everybody wants to short the top and everybody wants to long the bottom. I don't. I want like the meat and bones right in the middle. That's it. I just need a little bit of that trade. That's all I'm looking for. And so it is much easier to do that when we can say, okay, they're long, Apple, Nvidia, Amazon, Microsoft. Maybe I should be looking to buy dips on QQQ just because, they're buying tech. So I should be buying tech. I shouldn't be the one trying to short it. So you can do it with oil, you can do it with all those, but it's most effective with, just your real big names. Okay, good. So it looks like, oh yeah, this one. So the Agent J is talking about three push wedge. It's another Albrooks thing that I love. And I saw this one. I'm assuming this is the one that you're talking about. I saw this one. I saw it after the fact. And when they're this dramatic, it can even be scary for me. Like it can be hard to take that, and this is one that is a scarier dip to buy just because we have seen those volatile flushes and we're straight up looking for one to buy into. But yeah, this one was sweet. If you were on it and you just believed, you were handsomely rewarded there. Nice. Okay, so we're good. We're good. Okay, perfect. So next thing we're going to talk is, this is extremely common strategy. Everybody, I like pretty much everybody uses this. And so I'm going to clean up the charts a little bit for us. You should never just have, your one form of confirmation. That's what I'm really trying to beat into you tonight, is just because someone's at support does not mean calls. If the market doesn't say that, then it doesn't work for you. But tonight we're going to talk about everybody's favorite strategy, one of the more simple strategies there is. It's something that just makes sense to people. I, of course, think that you need multiple forms of confirmation, and SPY was one of these days where, God, as I'm looking at it, this is actually going to be a good example for what we're talking about. And so what is this strategy? And it's buying a pullback to the 9 EMA. Everybody trades the 9 EMA, or everybody at least has it on their charts. A lot of people for some reason have it there, but don't pay attention to it. And so I just want to talk a little bit about what do I look for when I am looking to buy, say a pullback to the 9 EMA, maybe use the 20 EMA, whatever it might be. And so, and what are some rules? What are some things that I like to look for? And so we're going to use SPY. You know, it's always the best example. It's one that just, it tracks the market so well. And we're going to talk about, again, we aren't going to get into too much detail looking at all of these again. So for all of the same, reasons that I explained that we were looking for dip buys and blah, 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 we already know all of this stuff. So when I'm explaining these 9 EMA buys, as long as everybody agrees, we can at least say to ourselves that, like, yes, we understand that the market as a whole is confirming this. So now that we understand the market as a whole is confirming some dip buys on SPY early in the day, what are some things that I look for? What are some rules that I follow when I'm trading the 9 EMA? So I will, when they're sideways like this, I will frequently not buy the first break. Could you have bought this break over the 9 EMA and the retest here and made a couple bucks? Sure. But as we can see in the end, it didn't really work out for us. If I am trying to buy the 9 EMA on a reversal, because the market sold off, gap down a little bit, not much, gap down a little bit. And then we're looking to buy this bounce. Well, maybe you don't scalp this first bounce. And so you're looking at this, and now we see a pullback under the 9 EMA that doesn't, now we know at this point in the market, we've watched for this long, we know that we are in dip buy mode. No questions asked. So we're in dip buy mode, and we start to look for the break of the 9 EMA and a retest to buy on it. Well, you don't just want to buy this because we broke the 9 EMA and now we're testing it. My rule is I like to see a little bit of extension. And what do I mean by extension? I like to see it get away from it. This one we can see we got away from it, but when we pulled back, it was just flat. It wasn't helping us. This one, we get a breakout, and now we get our extension. And we know we have the market in our favor. If we're trading an individual stock looking to buy the 9 EMA dip, I want the ETF to confirm it. I want, if I'm looking to buy a dip on Apple or Amazon, I want QQQ or SPY confirming that. If I'm trading SPY, I want all of those other names to confirm the dip buy. So we've got extended from it. I am now looking to buy the touch of the 9 EMA. And I'm a stickler on it. I will do it 2 times. By the third touch of the 9 EMA, you're risking it. There is, of course, days like, I think maybe it was yesterday. There's days like this. We're going to go back and talk about this one next. That are traded a little bit different. This is wildly uncommon. We have 4 red candles or whatever in the first 2.5 hours of the day. That's not normal. So I am a stickler. I want to only buy the first or second touch of the 9 EMA. And I want to buy an actual touch. That's my big thing that a lot of people don't do. Oh, it pulled back close to the 9 EMA. Oh, it pulled back close to the 9 EMA. And did both of these, were they a good entry? Yeah, in the end, they were. I want the touch. So when I see it around here or just getting barely below it, that is where my entry is. And this is a nice one because we have pushed up, pulled back down. We have the confirmation of holding a strong zone. We have the confirmation of setting a higher low. We have the confirmation of we have broken the EMA, and we have now kind of pulled back, and got extended from it. And we are now pulling back to the 9 EMA. I am looking to buy the touch, knowing that my stop is a close somewhere down here, below my daily level, below my 20 EMA. That's what I think is the really, really great to use, the 9 and 20. A lot of people use the 21. It doesn't matter. You want to wait for the true pullback to the 9 EMA, and you want to wait for a close under this 20 for your stop out. Just to, if you're wrong, you're wrong. Take the stop out. No big deal. And if you wait for this touch, you can see here, we got, what do we got? We got less than 20 cents of downside against us. Well, if we were here, we had over 20 cents, we had almost 30 cents of downside against us. So we even save ourselves a little bit of risk by just waiting. Then we wait for our stop. So this is my ideal entry. It's the first entry. Obviously, I'm going to be targeting basically these highs at first. You know, that's going to be your first target. Well, if you miss that one, you can try this one. I don't love this one as much because I want to see some more extension and then a little consolidation. You'll hear me, Flips, all kinds of people say, you know, let it break and consolidate a little bit. You know, we've got a volatile push up, kind of sold back down, push up again with a volatile sell down. I want a candle like this. Then this is the next entry I like. Like I said, I don't love this one. Could you have bought it? Did it work out for you? Absolutely. But I want to buy the first or the second touch with a bit of, you know, we want some context. We want some good context. This thing's technically just riding it. We want to close a little bit away, close a little bit extended. You know, of course, we didn't get this extended from it, but we got some closes. We got some extension. Then we want to buy this pullback here. Don't be rushing into these. As you can see, anybody who tried to buy this breakout was super sad. Anybody who bought this breakout was, you know, worried because nothing was happening. And then finally, this one, you kind of buy the dip, you ride this candle up and it closes on its high, you know, where you want. I'm probably trimming there. And then you get the nice breakout candle up to this level. And we had the market confirming this the whole time. We aren't just buying these 9 EMA pullbacks. We always go back to the market and say, okay, look, yeah, this one's pulling back and bouncing its 9 EMA. Oh, Amazon's taken the reversal and is now buying up to 9 EMA. Oh, Microsoft's reclaimed, VWAP reclaimed all of these EMAs. NVIDIA flying. So QQQ in buy mode, we're looking pretty good. If you really want to start digging deeper on SPY even, you know, you can look at XLF. Obviously, it's your one non-confirmation. XLE, buy mode all day. So once you have buying in all the tech names, you don't have buying in financials, but you do have buying in energy. Well, that means 50% of SPY is being bought. So we have the context to enter the trade, whether you're buying the 9 EMA dip, the 20 EMA dip, this daily level dip, and then you target your next level. So use that much confirmation for all trades. You know, that's your 9 EMA trade. Does everybody get it? Like I said, these ones are going to go a little bit quicker. I only got 2 more to talk about. Are we all good there? What is the perfect time to enter when you see the extension? Hopefully I covered that viral. You don't want this. You don't want to buy the extension. You want to buy the pullback from the extension away from it. Even this one, don't love it. Market was seeing some selling. We know that by this point. We've broken the 9 EMA. We've extended away from the 9 EMA. We have consolidated. So we don't ever quite touch it here. And this would have been my downside target if I was short there. So not the best trade. You can make some arguments over here. We had all this resistance overhead, so maybe you're shorting that, you know, previous resistance, but not a trade that I'm really looking for, you know. And then obviously this one blows past it. This one, you can take this at one point extremely extended. You can risk this entry knowing that your stop is somewhere up here. You're going to have a slightly wider stop, you know, maybe 20, 40 cents, but let it break down, let it get away, let it come back, and then use your candles to help you stay in the trade or whatever it is. But make sure the market is telling you, you know, things are selling or things are buying, and you want to do what the market does, you know? Market makers don't care what you're doing, but we should care what hedge funds and big money is doing because they control it. So, like I said, we want to hop the coattails. Did we bottom tick this entry? No, but we got right in the middle. We rode it to almost the top and got out and got our chunk of the trade, you know? Let the real rich people and the chasers get it up here. Let the like risky front runners get it down here. We just want the safe, easy money right here. And the market told us very likely this move was coming once we entered that trade. And man, you catch a dollar move on SPY in 20 minutes, you're done for the day. Okay, so next one that we're going to talk, everybody's good there. My favorite thing, well, it's my favorite and only pattern that I trade. I do not trade head and shoulders. I don't trade rising wedges. I don't trade bull flags. I don't trade bear flags. I don't trade any of those. Statistically speaking, low success rate, 50-50, even worse on some of the named patterns. A bull flag, I think, uh, well, they typically are going to fall into the four breakouts fail. So anytime you have a little flag going on, the first four attempts over the flag are not going to break. So that's why I always just think about them. If I see a flag, I think of it as two trends. Well, I guess it's technically two name patterns I trade are double tops and double bottoms because they work. They have an extremely high success rate. And part of that is, and people have heard me say this, the market spends most of its life in a range. And so we want to take advantage of trading in ranges because when we're range trading, the entries will 9 out of 10 times give you the best reward or risk reward ratio in the market. So as we see all the time, breakout traders get smoked. And when they get smoked, like, on range days, when they get smoked in spectacular fashion because they are expecting this when they don't realize that this happens like 15 times a year in the market. You don't get movement like this. You get movement like this 3 days a week or more. This is how the market works. And the market doesn't like setting new highs. And the market doesn't like setting new lows. So that is why I preach to everybody of, don't try to beat the market. Just go with the flow of the market and say, this one, obviously, I lucked out a little bit by buying the wick. But look at this and look left and say, okay, the market's been bouncing here, but it didn't. But the market's been bouncing here. That's right where we are. And the market bounced there and the market bounced there. And if you just keep going left, all of a sudden you start realizing, oh, like the market bounces and like rips around here, like, oh, this is an important zone. If we come up to it, I guess we probably haven't been there for a few days. If we come to it, the market is going to react there. And so don't be the person buying puts here. You never want to be the person shorting it in the hole. It goes back to this, maybe you bought these first touches of the 9 EMA, second touches of the 9 EMA and made money. Well, don't be the one buying the third touch of the EMA. That's risky, odds are low that one is going to hold. So be the person who's always looking left. And today is one of those days that offered really nice double top and really nice double bottom that were all backed up in confirmation from the market. As I said, I started with this one. We already talked about this one. We knew that when we looked at the market, all of the big names as well as energy were getting ready to bounce. Then we are coming to this very big level down here. We also have volume kicking in because it's the end of the day. So we know our volume is going to start increasing into end of day. And we're seeing the seller volume is now shifting to buyer volume. That's something that I always watch for is what are these numbers up here doing? I don't necessarily care about the specific number, but if I'm trying to buy calls down here, the first thing I want to see is, and I might have a 5-minute, indicator up here. I want to see a candle that ends up with more buyers than sellers because you don't want to fight the market unless the market is telling you fight me. And so that's what we had here. Even if you didn't buy this oversold wick on your ADD and on your tick, and maybe you didn't see that, but you see this and you see support and you see support. And is this a little higher? So your stop is 30 cents instead of 20 cents. Sure, no big deal. We know all of this heading down. We are watching the entire market. So you can't just buy every double bottom or short every double top, I guess that doesn't count because of the middle. You just can't short every double top you see or buy every double bottom you see. You need everything in the market telling you to buy that. This was one that obviously it had a lot going on. We didn't touch on this earlier, but we also had the opening range right there. And so I put a lot of weight on that. The market is trading in a range. If we are range trading, then we treat it as such. And we know that when the market is in a range, we buy dramatic double bottoms. And what do I mean by a dramatic double bottom? The market's saying most big names looking like they're going to bounce, and then a double bottom that took all day to form. Here's our low. Here's our next low going into end of day. Even sets technically a new low, which is rare. But here's our next low going into end of day. Took all day for that to set up. The only other one, and I didn't catch this trade, I wish I would have had I been realizing that we had all-time high right here. We had the top of our CPI candle, and we had this. I mean, this was, and we had the market confirming it as well. You can short this, and your stop is above the new all-time high. So you have risk on these candles, 30 cents or whatever. But your stop is right above. So this is reasonable enough of a double top right here. We also had a bunch of names in the market, your Apples, Amazons, Microsofts, all pushing up into resistance. So we have confirmation on those. When we were in here, or maybe thinking this was going to be the double top of the opening range, or maybe thinking, double top here, even though it's negated by this, we were all just in the middle of the trading range. So that means all of the names in the market are likely in the middle of their trading ranges, and you don't want to take those trades. And so that's my double tops and double bottoms. I need confirmation market wide. I need a volume shift in my direction. Has the market been showing us trading range activity during the day? If it has, then awesome. We treat it as a trading range, and we short double tops and we buy double bottoms. And like I said, this is my favorite setup in the market, is a double top or a double bottom. If I had to pick, a couple things to trade with and, stick to them, it would be double tops and double bottoms at either the hourly 20 or the opening range. They are really, really effective strategies that you get provided one almost every single day, and they work. And if they don't work, the risk is minimal. And so I love the double top and double bottom as long as the confirmation is there. And so we had one more to get to, but we aren't going to get to it. It was going to be talking about the hourly 20. I like to always give, 4 or 5 minutes for questions at the end of this. And so we'll do hourly 20 next week. Next week is going to be some more unique indicators, some that people use, but maybe they don't understand. Talking about VWAP. And then we're going to talk about the hourly 20, how I use it, some very similar strategies, how we went through tonight, and how I use them on the hourly 20, Bollinger Bands, and then an EMA combo that I really, really like. I use a lot, and I want some more people to look at it, and it's the 513 EMA, and I use it as a crossover EMA intraday. It's really good. And so I just want to go over, a few less talked about, less used indicators and teach some people some things that I look for. But so with that, we're all done with the bulk of it. If there's any questions, I'd love to talk about them, even if you just want to look at a chart or something for the last few minutes. And if you got to get out of here, thank you so much for being here. I really appreciate you always coming. Nice, Viral. Okay, got it answered. Yeah, Cornbread, sometimes it does feel like the market wants to fight you. Ramsey, thank you. Yeah, Mario, everybody, thank you all so much. Do I know how you get on the hourly 20? You on Webull, yeah, you switch to Thinkorswim. No, I'm just kidding. But pull up the 20 EMA and look at it on an hourly chart. But the issue, your hourly 20 will never match my hourly 20 because Webull closes their hourly candles on the 30-minute mark, not on the hour mark. So the math is different. My math is based on, 4 o'clock, 5 o'clock, 6 o'clock. Your math is based on 4:30, 5:30, 6:30. So they will never line up exactly. As far as why Webull does that, I don't have the answer. Maybe it's more common than I think, but like You sure would think the hourly candle closes on the hour. You got caught buying a put at the bottom on Nvidia. Nvidia was a weird one today. I did trade it. I longed it early in the day. I got one of these. I got this bounce or something, and I was all out here. I have very few levels on Nvidia in this area, and so for me, we're going from level to level as Nvidia. It respects levels surprisingly well. People just want to get in the middle of levels for some reason, but basically, once we're up here at this 134 area above it, you gotta buy these dips. I mean, there was this break below, and I see how maybe somebody could have got, I see how maybe somebody could have got faked out there. But your stop should have been tight. So hopefully it didn't hurt you too bad. Yeah, exactly. And so the issue with that is that, the issue with saying that that's when the market opens is that's not when the market opens. The market opens at 4 a.m. New York time. So it's like, yeah, it's just because Webull is not super advanced. Like they don't, they're not, thinking of it and being designed by people with a ton of time in the market. So yes, that is when, what people call the New York Open, though it's not the New York Open because the real New York Open is 4 a.m. But well, 1 a.m. my time. So, 1 a.m. my time. So it just doesn't make it doesn't make sense to me personally why they do that. But if you're ever curious what the if you're ever curious what the hourly 20 is at and you want to compare it to yours, then feel free to shoot me a message and I'll answer it. I mean, Mario, I got no idea. If I knew what Nvidia wanted to do, I'd be a billionaire. But as long as they're above 134, I'm a dip buyer up to this 136.50. That's where I would expect the next rejection, pretty major 136, 136.50. That's where I'd expect the next rejection to come, but it's Nvidia. And then if we pop that 136, there's no data here. We have spent one day above that 136.40 and we spent half the day. So that's how I trade. If we're, and you guys just saw that it is obviously not this simple, but if we are above this daily level, I'm not looking to short it. The only place I'd look to short it is up here at this 136.40 with the tight stop. But I'm not looking to short it when we're at support. That's not how I do it. Can I do a class on prop firms? Ain't no need. No need to do that. I mean, one, there's not enough to teach, and two, the last thing I want to do is encourage people to use them. Okay, if that's gonna do it. How do you check if it's good support? So that's a very loaded question. As I said, I get all of my levels from the daily. I don't know why this one's not on there. I get all of my levels from the daily. So they are strong levels. Most of my levels come off wicks, big rejection points. That's how I like to trade. That's where you get volatile reactions. And we as options traders want volatile reactions. So these are big levels. All of these levels that you see, those are big levels. Well, if I go to SPY today and I'm like, okay, we bounced at 575.14. Well, great. But I don't care tomorrow. I mean, I can glance back and say, hey, we reacted here, but that's nowhere near major enough for me. I mean, we had a couple candles bounce around on it. That doesn't mean anything to me. If I go to the daily time frame and I see something, like big old rejections, that's what I want to see. I want to see big bounces, big rejections off of those levels. And, like the FOMC level has been giving us ridiculous reactions. Obviously, we're a long ways away from there now, $10. But the FOMC level have been giving us crazy reactions. I want big movement off of my levels, This one's even getting a little crowded. But trade these simple levels. Yeah, and what I always tell people is, and I mean, I'll just show you real quick, like when I chart, I don't like I care about tops of consolidation zones and I care about big rejections. So right here, obviously to me, strong level, probably matches up pretty close to that one I was trading today. Right here, I am not saying in any way, shape, or form that this candle hitting 565.24 caused this sell-off, but that's where it started. So I want to be aware. This one right here, this was like gap up bullish candle that by the end of the day had sold $14. Is that right? That's insane. Even more. Yeah, had sold huge. So I want to be aware of that level. And so that's how I find all of my levels. And so I call them dramatic highs and lows. I want to mark these kinds of dramatic highs and lows. And that's what I want to trade around because that is where historically the market has made a big move. So maybe it'll do it again. And they're just the easiest thing to identify on the chart and look for those moves off of them. And if people just go chart these dramatic highs and lows and trade around them, they'll do very, very good. Buy those dips down to these supports. And, about the time everybody starts yelling short the market, everything's going to die. You're going to find yourself at one of these nice, strong supports and you're going to get long when everybody else is chasing the short. So that's what I do. Super simple. Keep it cut and dry. Obviously, there's times where we don't have data here. So obviously we want to mark the all-time high, but we don't have much information here. So it makes it weird to trade. And you do kind of have to focus on some of this, less important stuff, the levels you don't care about. But then as we get more and more data up here, more and more candles, whatever, then you'll start to have some levels there and you'll see where the big rejections came and all of that. And you can just trade those, but keep it nice and simple. Okay, well, if that is going to do it, thank you so much, everybody. Really appreciate you being here. Fun class with all of you, and we'll see you tomorrow. Trade safe. Yep, thanks, everybody. Have a good night. Yep, right on, everybody. We'll talk to you tomorrow. Have a good one.